The United States' real gross domestic product, technically defined as the output of goods and services produced by labor and property located here in the U.S., grew 2.5% in the second quarter of 2013. That number was far better than the first quarter's real GDP increase of 1.1%. Unemployment stands at 7.3%, the lowest since December 2008. Nebraska's unemployment rate, meanwhile, is much lower at 4.2%. Yet each job report, on the national level at least, seems to bring hesitation from those who believe the numbers hide the true status of many job seekers. And the U.S. stock market last week hit a new record after the Federal Reserve announced it would maintain its current economic stimulus effort. While agriculture has fared better through recent sluggish years, increased land prices and other outside factors could pull that success closer to average. In a recent report from the Federal Reserve Bank of Kansas City, Nathan Kauffman and Jason Henderson detailed the wealth effect in U.S. agriculture and noted the USDA is predicting net farm incomes during 2014 to fall 20 to 25% below 2013 highs and remain there over the next decade. We recently sat down with Nathan to discuss Nebraska's high agricultural land prices, record farm incomes, and the current state of the U.S. economy.
I think that overall the U.S. economy has been recovering, albeit fairly slowly. There are indications that some of the sectors have been doing very well. Housing has been doing very well. Manufacturing is another sector that's shown some improvements. What it's not translating, though, it's not translating so much into job growth. And speaking specifically for Nebraska, that's been the story. Manufacturing has been strong, or relatively strong recently. A lot of that is food processing and machinery. That's a strength for Nebraska. The housing market has been doing fairly well. So those areas have been doing well, but it's not necessarily translating into a lot of job growth for the nation or for the state in particular. So I think that overall the economy has been expanding, but at a slower pace than what some might deem ideally.
Right.
And especially as it relates to employment numbers.
How has ag been able to capitalize on the value of the dollar as they export goods to other countries, namely China, obviously, and how might that differ going forward?
So the value of the dollar is key for exports in the sense that when the dollar is low, then other countries can import U.S. products at a lower relative price. And so a lower dollar value is a boost to exports. When the value of the dollar rises, then that's the reverse action, is that commodities get more costly and they may look elsewhere to import those commodities. So when you think about, for example, the value of the dollar versus the value of the Brazilian currency, for example, which has fallen quite a bit, that's a boost to the Brazilian commodity export market, but would present some challenges for the U.S. market. So there's a lot of interaction there between different countries, and when we export to China, China has been a huge player in ag export markets, and it's been driving a lot of the growth. But the dollar is an important factor, and especially to consider relative to other countries out there that are also big exporters.
Let's talk about agricultural land prices. This is probably a common trait throughout the Midwest, but Nebraska alone rose 25% last year. Is that a level of concern, or is that something that is safe because a lot of people are doing it in cash?
I think that there's a little bit of both. There are a lot of operations out there that own their operations and they own their land debt-free. There are, however, some operations that are much more highly leveraged. And so when we think about the possibility of something that could potentially turn into a bust akin to the 1980s, that's where we try to monitor that, is in the way of debt. And so there are some operations out there that are a little bit more highly leveraged. I think that there are a lot of people that look at farmland prices and think that it's not sustainable. One of the ways to think about that is in comparing it to, for example, the stock market, and look at the land value to rent ratio as a good proxy. Right now in this area we're typically at about 32 to 33, which means that investors would invest $32 for $1 worth of returns. The historical average for that is about 15 to 18, so we're much higher. The historical average for the S&P 500 and where it currently is right now is about 15 to 16. And so when you think about of land as an investment, and lots of other factors go into the purchase of farmland, as an investment, you might lead to the conclusion then that those prices are definitely higher than where they've been historically and higher by comparison to other investment options.
Right, and in sustainability overall in that, farm prices income cannot keep up like it has been going so far. Over the last year or two. That's
right, and you mentioned China. China and ethanol have been two of the main demand factors that have driven commodity prices the last several years. Now we're starting to see biofuel markets slow down a little bit in terms of reaching that plateau. There's some questions about growth coming from China. And so there's some real demand questions out there, and in the meantime we're seeing a supply response to high prices, and that's been driving prices down further. So thinking about what it costs to produce a bushel of corn on an acre of land versus what you get for that bushel of corn in the market, it's very different now, and it's very different potentially going forward than where it has been the last couple of years.
Crop farmers with irrigation did well this last year. They'll probably do well again this year, but farmers or ranchers with livestock probably didn't do quite as great. What's your impression of how this multi-year drought has impacted producers across this multi-state region?
Yeah, it's been especially pronounced out in the western plains and in the southern plains into Texas. We hear a lot of stories coming out of Texas. There was a processing plant in Texas that closed down earlier this year just because there simply wasn't enough out there in order to maintain that kind of capacity. They've been enduring high feed prices for a couple of years now. These have been losses that have persisted now for a couple of years. I think there's some real concerns about what that industry looks like going forward, some concerns about what demand, especially export demand, looks like especially for the cattle side. Hogs has been a little bit different. We've seen a little bit more export demand. Again, China is a big player there as well. So I would say that there's still some concerns about what happens in the cattle sector.
You've done some work on young and beginning farmers. Tell me the difficulties that they face that their predecessors maybe didn't face.
Yeah, quite simply, it is that in order to get started in agriculture, it's very, very costly. And young and beginning farmers that are trying to get started have limited equity, they have very limited collateral that they can provide for loans, and so thinking about getting started in an operation that's as capital intensive as what agriculture is difficult. And so that's one of the factors contributing to why it's difficult to think about the transition from an older generation to a younger generation. And there's lots of other factors again there that go into it, but that's one of the challenges that young and beginning farmers are going to face, is just simply the cost that's necessary to get started in agriculture.
What's the solution to that? Merely renting?
I think that's where the trend has been going the last few years, especially with where farmland prices have been headed. There was this trend that was developing up to the mid-2000s anyway, where more and more younger farmers were actually full owners of the land that they operated. That trend has kind of reversed a little bit now, so that you do see a few more out there that are renting a larger share of the land that they operate, and there may be a tendency to go further down that route.